Hey everyone, it's Henry, and I just want to make you aware of an opportunity that can make you some money. We have seen two popular FANG stocks over the past few weeks announce stock splits. First up was Alphabet, the parent company of internet search engine Google and streaming platform YouTube. Alphabet announced a 20-for-1 forward stock split that, as of the closing bell on March 9th, would bring its share price down to $133. That's great news for investors looking to sell covered calls, puts, or run the wheel strategy, which I'll link for you in the description. This past week, e-commerce giant Amazon followed suit with a 20-for-1 forward stock split announcement of its own. Assuming it receives shareholder approval, Amazon's pricey share price will come down to around $135. But this will be Amazon's very first stock split since September 1999. So based on this recent information, I want to tell you the effect this will have on these two stocks over the next couple of months, as well as a prediction on the next stock that will split, or at least is likely to split. Stock splits have absolutely no effect on the operating performance of an underlying business, but that does not stop a stock from experiencing a big move or becoming more volatile. In other words, a company isn't going to sell more or less of its product or service just because a split is going to take place. However, there is still money to be made off of human behavior. As an example, Amazon shares are set to fall from around $2,800 to 1/20th of their current share price to around $135 to $140 per share. However, every existing shareholder will receive 19 additional shares for each share that they own. Instead of owning one share at $2,800, investors would have 20 shares at $140. Both work out to the same market value of $2,800. But the stock split mechanism allows for the share price and outstanding share count to be altered. So what's the point of a stock split? The simple reason is to make shares more affordable for retail investors. If you have $500 to invest and your online brokerage doesn't allow for fractional share investing, you can't directly put your money to work in Alphabet or Amazon right now. But after their respective splits take effect, $500 would be enough to purchase a few shares of either company. Stock splits are also often indicative of a company that's performing very well. Think of it this way: a publicly traded company's share price probably wouldn't be high enough to split if it wasn't executing well and out-innovating its competition. Amazon wouldn't be over $2,800 if it weren't absolutely killing it in the e-commerce game. A stock split can make the shares seem more affordable, even though the underlying value of the company has not changed. It can also increase the stock's liquidity. Because shares are more affordable, investors will be able to allocate more of their capital into the stock. This drives up the demand for the stock and increases the price per share. I think this is going to have a lasting impact on both Amazon and Alphabet, where they are both going to see abnormally high returns over the next quarter or two. That means there's an opportunity to make money over the next 90 to 180 days as a relative position to the market. That also means leaps have become a lot cheaper on these names. This is the best strategy for those medium-sized accounts, maybe in the $5,000 to $10,000 range, to build a portfolio fast. That's because leaps are way cheaper than buying shares, and shares have just become 20 times more affordable. A leap option is basically a call option that you're buying. However, it's a leap because it's a long-term call option that's about 1 year out. It could be 1 year out, it could be 1 year and 6 months, or even 2 years. Now, the standard textbook definition of a leap option is buying a long-term call option. However, it's good to buy a long-term call option that is deep in the money. What that means is the delta can be 60, 70, or 80. That's because this leap option that has a high delta is going to behave very similar to the stock. So instead of owning the stock and buying 100 shares for say $130, which would be $13,000, you can buy a leap option for a fraction of the cost. It could be just a couple of $1,000s, and you're still going to get the same exposure as if you were to own 100 shares. So when the stock goes up, you're going to have a similar benefit to owning 100 shares, but you don't have to fork up all of that capital, such as $13,000. The benefit of a leap is you get a degree of flexibility to enable yourself to not only benefit from the power of leverage, but also do things like a poor man's covered call, where you own a call and sell calls against that position rather than needing the money to do a real covered call. So you can make some really good income by selling a poor man's demands covered call every single week or every single 2 weeks. So all around, a stock split is a very good thing for the average retail investor and option trader. Now, with that being said, I also want to discuss Tesla and Tesla stock. For those of you who might not recall, Tesla was one of the first brand name stocks to see its valuation launch a lot higher after announcing a stock split. Tesla's 5-for-1 forward stock split announced in August 2020 saw the company's shares trade higher by more than 60% in 20 days between the announcement and the enactment of the actual split. One reason a stock split would make sense here is Tesla's share price is more than double after the split, and Elon Musk does not mind some financial engineering. Although some folks have the luxury of purchasing fractional shares, other investors would be forced to save up $850 just to buy a single share of Tesla. Tesla also has some of the most liquid options on the market. However, most people still cannot afford to do a covered call because it costs something like $85,000 to do so. The company previously announced 5-for-1 stock split occurrence at shares sitting at around $1,374. That's well within sight given the range that Tesla has been trading in this year. However, we have not seen the stock go past $1,300. It has been around $800 to about $1,200 per share. However, over the next few quarters, Tesla is likely to have better than expected numbers, is likely to continue to beat earnings, and if deliveries are going well, Giga Berlin, Giga Austin are going to report some good news, then I can see the stock moving higher. I can in fact see the stock going up by about 50%, which would bring the stock back to about $1,200 to $1,300 range, which I believe can happen in the next quarter or two. But stock splits are announced randomly when we least expect it, and gains come very quickly. It's likely that within the next quarter or two, if earnings come in strong for Tesla, they may announce another stock split. Another reason for Tesla to consider a stock split is that Elon Musk knows his audience. Even though institutional investors and insiders combined do hold more than 60% of the outstanding shares, Musk is well aware that Tesla is a favorite holding of retail investors. Now, the insane part is 60% are institutional shareholders. However, Tesla has a massive market cap of almost $1 trillion, hovering in that $1 trillion range. So retail investors own a whole lot of shares. In fact, hundreds of billions of dollars worth of shares. To keep them happy and buying Tesla stock, Musk may be willing to encourage the company's board to approve another stock split, which is a very big opportunity if you get into the stock before they make that type of announcement in the next 90 to 180 days. But surely I believe that the stock is going to split over the year or 2 year mark. I can't predict the future, but I do know that it is going to happen sooner or later given good results for Tesla's earnings. That's because the stock is going to go higher as earnings, deliveries, and revenue goes higher. Doing this would allow investors with less starting capital to take a position in Tesla stock. Let me know your thoughts in the comment section below. Do beware of scammers, and thanks for watching.